What we found today was that in as much as volumes were higher today than they were yesterday, the all-share index went down today by 10 basis points. And what we saw was pressure on the sell side. We noticed that among the actively traded stocks today, among the top 10 traded stocks today, the banking sector had about 7 stocks in that list of 10, showing that same interest that we've seen in recent past in the banking subsector of the Nigerian stock exchange. But we noticed today that despite the increase in volume, the market went down today.
Let's take a look specifically at the banking sector, where we know we've had the mid-tier banks specifically standing in the spotlight. Run us through their performance today. Have they managed to sustain the bullish run?
Well, for the mid-tier banks, it's been like a mixed grill. For some, they've been able to sustain the bullish run, while for others, it's not been a good day. But overall, you could say that the mid-tier banks did better today than the top-tier banks. If you look at today's buzz critically, you will find out that the big banks like the UBA, the First Bank, and the Zenith Bank all lost today. But we had banks like IBTC, Diamond Bank gaining today, which shows that investor sentiment is still geared towards technical analysis rather than fundamental analysis. Because fundamentally, if you look at the banking industry, you see that the top-tier banks are still strong, with their Q1 results being very good. But we see a situation where people are hoping, investors are hoping for capital appreciation in a short while by investing in the mid-term to low-term banks, to the low-tier banks that are likely to go up in price faster than the top-tier banks.
So that explaining some of the divergence in trend that we're seeing when we look at mid-tier compared to your top-tier banks in the Nigerian economy. Given what you've said, how is that all influencing the way you're playing in this space at the moment?
Well, for us, in the space of the whole market, and then with particular reference to the banking subsector, our view is that you will never get it wrong when you trade fundamentally. When you look at the fundamentals of each company, dissecting the company from the sector, as it were, in the sense of looking at the company to see is there propensity for more of capital appreciation than what we have, where people are gleaning towards dividend and bonuses. Because you find that what investors should look out for should be capital appreciation for stocks that they've invested in, because the drive towards bonuses and dividend has given us a funny outlook in the market, or a funny thing coming out of the market, where you find that banks and even companies that haven't done so well in the market, that have come out with results that are not so good, are yet giving out bonuses and declaring dividends, and you're wondering, why would you do that? So for us, fundamentally, we're looking at companies that are able to grow in terms of capital appreciation to give us the desired returns in terms of balancing our portfolio.
Given that that's the case at the moment, and where fundamentals are so in focus at the moment, we've got a very contentious issue coming to the surface, where we've had, this proposed unbundling of universal banking within the Nigerian system. Do you view this as an ideological backsliding or a progressive move, where some have suggested that the integrated model has been, to a large extent, responsible for the crisis? What's your view?
Well, I will say that it's more of a progressive move than a backslide, because if you look at it critically, not just only in Nigeria, even if you go way back to the US, where they had also done the same kind of thing that we have done, and now they're also thinking about going back to this unbundling of the universal banking system. It's better to unbundle in such a way that you can dimension risks. The risk involved in commercial banking is quite different with the risk involved in investment banking. And these risks should be separated. And that is why we view what the central bank is doing as a step in the right direction, where you would have an unbundled group, commercial banking license with the commercial bankers doing what they know best, investment banking license with investment bankers doing what they know best on a different balance sheet. so that the risks associated with this business do not have to be consolidated. Because imagine what would have happened if the risks that the banks had experienced in the investment banking sphere in terms of their equity trading buckets had not been consolidated with the books of the banks. What we would have seen would have been the banks performing better than they did last year. So this is, we believe, is a step in the right direction, and we support this move by the central bank.
Well, of course, that's just one perspective. As I was saying in the run-up, it is certainly a very contentious issue right now. In the meantime, I mean, that is just one of the things the Central Bank of Nigeria has to contend with. Managing inflation is yet another, employing a counter-cyclical remedy to the credit crunch as well. With the MPC's interest rate decision being anticipated today, what are your broad expectations on that front?
Well, from the MPC, we do not expect any changes from where interest rates are right now, because we've noticed from the present regime of the central bank that what they've tried to do is to drive down rates, which is positive, because you realize that in Nigeria we had prime lending rates which were double digits and very high, and that made lending to the real sector very difficult. But with rates now going south, we believe is a step in the right direction, and we do not expect to see any changes from the MPC that is being expected today.